Okay, lastly, talk about growth. So growth is predominantly looking at the US market. So what I did here is this. I just look very briefly as what is happening in the US. So again, for me to look at economy, I just look at two indicators. Number one is the unemployment rate. Now, unemployment rate, higher better or lower better? Lower, thank you so much, lower, lower. Okay, but for US, there's this pattern that I'm very uncomfortable. Can you see every time I go low, will spike up? So, like I said, by usually the unemployment low is good, but I'm actually seeing, historically very funny. Every time it went down, it will spike up. Down it spike up, down it spike up. So I'm actually a little bit uncomfortable. Okay, due to historical reasons. Hopefully, nothing bad is going to happen, but history doesn't show very well. So this is one observation. Okay. Okay, second indicator I look at is PMI. Again, can some remember PMI, we below 50 is good or above 50 is good? Above, thank you so much. So this is the US latest PMI. So it's good or no good? Okay, it's below 50. So again, something that is I'm not very happy to see. So I am actually not so happy with the US economic performance. Okay, next I look at the valuation. What I do here is the PE for S&P. P ratio for S&P, as you can see now, is 28 times. Historically speaking, you can see that the average is about 26. So it's slightly above average. Is it very expensive? No. But is it cheap? Not exactly also. And again, if why I only look at US, basically I believe the Singapore market, STI, is correlated to the US market in terms of direction, but not in terms of quantum. That means US go up, we also go up. US come down, we also come down. It's just that when US go up, it go up a lot more. When it come down, it come down a lot more. Okay, so that's why I usually only just look at US. Okay, so what's the conclusion from this? I believe the downside rate for US economy is still significant. US market, though not overly expensive, it's not cheap either. However, interest rate decrease may stimulate upward market movement. So, it's a time whereby it's not so clear. You say bearish may not be because interest rate coming down. You say bullish may not be, then the economy not doing very well. So again, it's the kind of half-half. So my plan for growth is I will still avoid all the high-risk growth stock. Okay, can remember what all the high-risk growth stock? High-risk growth stocks are stocks whereby they have very interesting business model, but they are either overvalued, not profitable, fail 6 tests, risky assets. So this one I will avoid, even though their business can be quite interesting. Okay, so I will still try to avoid them for the coming 6 months, okay, given this kind of backdrop. Okay, and I will probably still focus on selling put options to make short-term gains. Okay, rather than buy the stocks and hold for long term. Okay, so again, this is personal. This is high risk to each its own. I'm just sharing what I do for growth stocks. Okay, so I just give an example what are put options. So put options is a bit like selling insurance like that. Okay, like for example, let's say as you Google, Google, okay, yesterday was $171. What I can do is I can sell a put. So in this case, what I did was this, I sell a put, expiry is 31 days later, and the strike price is 160. So if let's say, for example, if the price continue to be above 160 up to 31st December, then I can keep the premium of $1.45, okay, which is 100. Okay, so put is the lot size is 100. So I keep the premium of $145. if let's say the price actually fall below 160, okay, I need to buy 100 shares at $160. So this is what put option is. That this is probably predominantly my growth investment strategy for the coming 6 months. Okay, I am not so confident to buy and hold long term. Okay, because it's not exactly very cheap, even though it's not very expensive. And I don't think that I think that is still downside risk. So I also do want to hold long term. So this one coming very nicely, like I can see is I only hold for like 1 month period. Okay, 1 point. So for those who are interested in options, not to worry. Like we will have one sessions to actually talk a bit more. Okay, I'm just sharing this what I do. So to give you a sense, it's like a bit like selling insurance. Okay. Okay, but in my case, right, I think the stock selection is very key. I will only do put options on stocks whereby I like the business. Like for example, in Google case, I like the business. There's a clear growth story. AI, it passed my 6 tests, is undervalued. So this is from the Guru Focus. You can see that the fair value 220, stocks about 170, and it's not a high risk stock. Or simply put, it's a stock that I'm actually confident to keep for long term. I'm happy to keep for long term. Okay, only then I'll sell the put options on. So I will not try to sell put options on high risk stocks. So worst case, I just buy whole and keep the stocks. So very likely this is my growth investment strategy, at least for the next 6 months. So again, some key for thoughts. This is for my own personal, to which is own. Is it suitable for you or not? That is to which is own. Okay, there is no best answer. Okay, but that is probably what I'm actually going to do. So I've actually done my review for 2024. So I think the main conclusion is time to review your PPIG. Okay, very important. Like I said, things change, your objectives change, market condition change. So please go and review. We cannot depend on one instrument for financial planning, wealth accumulation. So need constantly review as market condition change, policy changes, or objective changes. So hopefully from this session, it actually gives you some food for thoughts, something for you to think about, whether is there any opportunities for you to capture. Currently, what you are doing, is there anything that need to review or not?